Soumya Kanti Ghosh, you're very bullish on some of the policy moves that the Modi government has made and their potential impact on Indian economic growth. But like we were hearing in the conversation with market experts before this, the fact that this is India's moment is not being said for the first time. Now, this is something that's been said multiple times in multiple years gone by. And therefore, what makes you confident that this is truly India's moment? Because in the past, we've had the knack of finding some way of snatching defeat from the jaws of victory, or not being able to capitalize on the moment like we should.
Yeah, thank you, Rahul. I think I will just very quickly quote some data points to support the point that Indian economy is actually placed in a sweet spot. The first is that look into the banking sectors. The net NPA is now at 10-year low. Credit growth is at 10-year high. Look into the digitization. The total number of UPI transactions this year is already touching 100 trillion. That could actually go up to 130 to 35 trillion at this rate, which could be 45% of India's GDP in the current year. Look into the SME sector. The overall credit growth in the current year, 10% is being contributed by the SME sector, and there is now clear evidence that a part of the SME sector is actually getting bigger. That means they are moving up the value chain. Then there is the look into the external sector, export data. Even if last year we did 420 billion, at the current rate we could actually do around 450 billion. This is apart from the services data. Tax to GDP ratio this year could be at the highest level, and India is the only country which has increased and seen an improvement in the tax GDP ratio. So there is compelling evidence of the data supporting that we are in a sweet spot. But the fact is that we need to take advantage of that. In the past also we had done, even in the external sector, we have already recouped more than 50% of the foreign exchange reserves, which is at the lowest level at the end of October. So in rupee, in real terms, it is actually appreciated if you look into the BSI data. So household debt to GDP ratio, look into the latest BSI data, it has actually now declined from the peak in March 2022. So on all counts, we are in a sweet spot. The point is, where do we grow from here?
Okay, so let's come to that, because we saw recently the World Bank enhance India's growth forecast from 6.8% to 7% for this fiscal. I'll start by asking Pranjal first for her broad sense for how the Indian economy is likely to grow next year.
Yeah, I think next year is going to be a bit turbulent and growth is going to slow down for a couple of reasons. One is global trade is slowing. You mentioned that a lot of people are not expecting a hard landing, but it's still slowing across the world. We can see trade volumes that we track very easily slowing. So exports will slow, and exports are important because they were a big driver of our growth when we bounced back from the pandemic. Then if you look at our consumers, a lot of the pent-up demand after the pandemic is now done. If you look at the deposits at bank, they are back to pre-pandemic levels. And then you have a government which is trying to bring down the fiscal deficit. Fiscal consolidation in the short run can take away from growth. So I think for all of these reasons, we will see growth softening in 2023. But we should not worry about it. We should focus about macro stability, keeping inflation low, bringing down fiscal deficit. Because once the global cycle turns, I think India today is really geared for a takeoff. And I would agree with Soumya Kanti Ghosh on many of these points he's made. I think there are two very exciting sectors: high-skill exports, where India is doing well, and then the entire tech startups. I know it's slowing a little bit right now, but this consolidation is good. I think in the medium term, our tech startups can find a lot of digital answers to real-world economy problems.
At this moment, what's your estimate for growth for next year?
For next year, we have growth at about 5.5%. But after that, we have growth going back to 6% plus.
At this moment, you have no intention of revising upwards the growth figures from what you did previously.
Yeah.
Okay, yeah. Samira, how do you see India's growth outlook for next year?
Pranjal was mentioning that there are some headwinds to deal with, but the way I generally want to look at this number is that if you look at last 2 decades, on an average, consumption has always contributed about 400 basis points to GDP growth, at about 4%, becomes like a absolute bottom for us. And on top of it, if we get just about 7% investment growth, we are at 6% overall GDP growth. So I think 6% kind of becomes a number which is quite achievable. On top of it...
So you're slightly more bullish than Pranjal is?
Yes, I am. think that the current data is not supporting a slowing economy. So there is right now a big disconnect between the data and the narrative. The narrative is more negative, as some of the things that got discussed earlier about headwinds coming from global slowdown, headwinds coming from fiscal contraction, monetary tightening. But you look across all high-frequency data, there is barely any slowdown in that. We are still running at a rate which is almost pre-COVID growth. So I think I will be slightly more optimistic on achieving a growth number of closer to 6 next year. But obviously global headwinds can change.
So we are getting more optimistic as we go from right to left, from 5.5 to 6. Soumya Gandhi Ghosh, are you taking the needle up even further?
No, I think I would tend to agree with Samira's point. We are a little higher than 6%. I think one possible advantage next year is that prices will actually be rapidly cooling off. So, I mean, for example, oil prices. Also, the fact is that the globally, domestically, I think inflation possibly has seen the worst, the peak, and inflation will progressively come down next year. Food prices has been surprisingly, even after such a bad weather in the last 3 months, I think unseasonal rains, food prices have behaved remarkably well. And with a 46% weightage in the overall CPI basket, if inflation behaves well, which is doing right now, and actually it has surprised a lot of the market expectations and forecasts, I think the stage could be set for a positive GDP surprise next year, because all GDP numbers last year, I think there is a disconnect between the leading indicators and the GDP. Last quarter GDP, the forecast which the NSO gives out 7%, I think that was nobody was expecting. So I think that next year we could see a positive surprise on a back of a relatively stable macro environment where inflation will not be an evil as we have seen this year.